Have you ever wondered how a string of code, just a bunch of ones and zeros, can be worth more than a brand new car? It sounds kind of crazy, right? Well, that's the big question at the heart of crypto. And in this explainer, we're going to dig in and find the answer. All right, so let's just lay it out there. Bitcoin. It's just a digital file. You can't hold it, you can't touch it, so why on earth is it worth so much? How can something that's basically just data have this massive real-world value? You know, to really get that, we actually have to take a step back and look at a question that's a little more basic.
Yeah, before we can even begin to wrap our heads around digital money, we've got to understand what gives any money its value. I'm talking about the paper bills you have in your wallet right now. And trust me, the answer is probably not what you think.
Okay, so think about a dollar bill for a second. The actual piece of paper. It's pretty much worthless, right? You can't eat it, you can't build anything with it. So why do we all agree to accept it for, a cup of coffee or groceries? The best way to think about it is like a movie ticket. The ticket itself is just paper, but what gives it value is the promise that the theater will let you in to see the film. A dollar bill is exactly the same. Its value isn't the paper, it's the shared promise that you can exchange it for real stuff like food or gas.
So it all boils down to one word: trust. That's it. Money works because we all collectively trust that other people will accept it. We trust the government, we trust the banks, we trust the whole system. It's a massive shared belief. And you've got to remember that word, trust, because it is absolutely central to understanding Bitcoin.
Right, so Bitcoin also runs on trust. But, and this is the big difference, it's a totally different kind of trust. It's not about trusting a government or a bank. No, this trust is built on something else entirely: pure mathematics and technology. Let's break down the three big ideas, the three pillars that hold up its value.
Okay, so here they are, the three pillars. Pillar number one is scarcity. It's rare, kind of like a precious metal. Number two is that unique kind of trust we were just talking about. Trust in the code, not in people. And pillar number three is utility, which is just a fancy way of saying, what can you actually do with it? So let's kick things off with that first one, scarcity. So this number you're looking at, 21 million, that is everything. It is the absolute bedrock of Bitcoin's value. There will only ever be 21 million Bitcoin in existence. That's not a policy, it's not a guideline, it's hard-coded into the system, and it can't be changed. Think about it. Governments can print more money whenever they want. With Bitcoin, that's impossible. It has a finite supply, which makes it provably scarce, just like gold. And that brings us right to the second pillar, trust. See, the trust isn't in a person or a government promising not to print more. The trust is in the math. It's in the unchangeable code that guarantees that 21 million limit. And from there, we get to our third pillar, utility. The ability to do cool things like send money anywhere in the world without needing a bank? Well, that only works because of the scarcity and the trust that's built right on top of it. And this all leads us to how Bitcoin works as an economic system.
Yeah, this whole idea of built-in scarcity is what defines Bitcoin's economic model, and it's exactly why you hear people call it digital gold. Let's dive into what that really means. Okay, so there's this really important event baked into Bitcoin's code. It's called the halving. Now, you don't need to get bogged down in the super technical details. Here's the bottom line. About every 4 years, the amount of new Bitcoin getting created gets cut in half. Automatically. It's programmed to do this, ensuring that the closer we get to that 21 million limit, the slower and slower the new supply comes out. And this right here, this is the night and day difference between Bitcoin and regular money. You know, fiat money, the dollars, euros, yen in the world. That's inflationary. Why? Because governments can always decide to print more, which can make the money you're holding worth less over time. Bitcoin is the complete opposite. It's designed from the ground up to be deflationary. That fixed supply and the halving we just talked about, it's all there to help it hold its value over the long run.
And that is why everyone calls it digital gold. It hits all the same notes as actual gold. It's scarce, it's durable, you can't just destroy it, and most importantly, no single government or bank controls it. For a lot of people, that makes it a really compelling way to store value, and maybe even protect themselves from inflation in our increasingly digital world.
All right, so that's the bull case. But look, we have to be honest here and look at the other side of the argument. This is not a one-sided story. The value of Bitcoin is, hotly debated. And there are some really valid criticisms and pretty big risks you need to know about.
So what are the big criticisms? Well, for one, critics will tell you, and they have a point, that unlike a house you can live in or a stock that represents a real company making real profits, Bitcoin doesn't have any intrinsic value. Its price is 100% driven by supply and demand.
What does that mean? It means if people suddenly lose faith and stop wanting it, its value could, in theory, go to zero. Plus, let's not forget it's still in a gray area with regulations, and you can't exactly go buy your groceries with it in most places.
So with all those risks on the table, why do it? Why are so many people all over the world still buying and holding Bitcoin? Well, as it turns out, people have a whole bunch of different reasons.
For some people, it's a statement. It's about the idea of money that's free from the control of any bank or government. For others, it's more like collecting rare art. They're owning a piece of something that is verifiably scarce and unique. Then you have the people who see it as a sort of insurance policy, a hedge, just in case the traditional banking system ever gets into serious trouble. And yeah, let's be real, a lot of people are in it simply to make money. You know, classic speculation. Buy low, sell high.
So when you boil it all down, Bitcoin's value really comes from the power of a single radical idea. It's not just about currency, it's not just about an investment, it's about the possibility of a global financial system that is rare, that anyone can verify, and that doesn't answer to any bank or any government. And whether that idea actually works out in the long run, well, that's the multi-trillion-dollar question, isn't it? So there you have it. Bitcoin's value is this fascinating mix of digital scarcity, trust in technology, and its real-world usefulness. We've talked a lot about the why, but what about the how? That's what we're tackling in the next explainer. How do you actually go about buying Bitcoin safely? Hope to see you there.